Okay, let's begin. So it's great to be back on the stage and we have a number of panels line up for you. So I'm so sure that we'll try to get best insights for you and you find it quite meaningful. Is this fine? Am I audible? Can someone raise a voice at the end? Yeah. So we're actually deliberating in the morning whether we should spend a couple of minutes talking about the incident that happened in Pahalgam and the warning it about. But we thought that people are already deeply grieved about it, so let's not talk much about it. The government is already taking action. Yeah, we all are, echo what feelings of everyone is there. Specifically talking about, financing India's growth story. There are many changes in the developments that's happening in this particular sector, and specifically, in last 1 year or so. What I will do is I will ask maybe 2-3 common questions and then we'll get into the specifics one. So, close by me, so let me start from here only. And one question quickly to all of you. I will, receive one so that several times I will not repeat. So, what does India's growth story mean for NBFC? Right? When we speak specifically about India as a growing country and we are marching towards $10 trillion economy, we'll be very soon become a $5 trillion economy, become the third largest economy in the world. What does this mean for NBFCs and how NBFCs are trying to grab this opportunity?
Thank you very much. So as far as our country is concerned, I think in the entire global scenario, we are the only ones who are holding up as growth story is concerned. And time and again, we have demonstrated our ability to come out of any kind of crisis, be it at a public level or at a financial sector level. This has always helped us. I think this therefore augurs well for us the kind of demographic dividend that we have, the MSME push that we have, the small businesses. The GDP continues to grow. The forecast is still about 6.5%, which is very good when compared to what is happening in the rest of the country. And then the fact that there is a whole lot of population which is still underserved. That clearly gives a huge amount of headroom for growth as far as NBFCs are concerned, which over time in the last 65-70 years of our existence have demonstrated the ability to handle multiple market cycles, multiple seasons. And therefore, I think the story is pretty good as far as the NBFCs are concerned, in terms of contributing not just for the economic growth but also for the sector itself.
Noted, and specifically when you say we have handled multiple cycles, till in fact, very recently people used to say shadow bank. Now that term is fading away. So, interesting thoughts here. Gayathri ma'am?
Very good morning. Very good morning, Chennai. Vanakkam. Lovely and happy to be here. Thanks for hosting this in my, sort of hometown, right? And one day I aspire to be back here. I don't know when it is, but whenever it is. So lovely to be here in Chennai. So to the NBFC growth story, right? I look at it in two dimensions, right? To the point Sir said, right? The kind of need on MSME, right? And the kind of work that's happening, right? 30% of the GDP, I think, is by MSMEs, if I'm not mistaken. The data would be somewhere around that of the country's GDP. And we still have a gap which is very significant to 20 to 25 lakh crore of rupees. There is a gap on the credit. Who can and how can you really fulfill that for reaching the growth agenda of the country? So that's a number one, right? So for that, the variety of product solutions, everything that really comes up, whether it is from, to retail, to affordable housing, to right in terms of rather other than tier 1 housing, to gold loans, to anything and everything that you can look at, and also to tier 2.5, 3, 3.5, almost their MSMEs. If you have to really help them, I think that is where the growth potential is, right? That is number one. Number two, NBFCs have to really if I can summarize in kind of one line, right? They have to remain definitely bold. You have to remain compliant. There is no two questions about it, right? And truly, in terms of, you have to be looking at innovations in terms of how you can reach out to me, right? In terms of to the end customers. So the local feet and the digital spine, as I can call it as, with a lot of digitization that can be done. Truly have a digital spine, but the local feet are very important and needed. The NBFCs can create a huge difference in the market for the future growth of the country. Those are my 2 points. Thank you.
Certainly, no doubt about it. Lakshmi?
Hi, good morning to all of you. As both of them echoed, I would say NBFCs remain the backbone of Bharat. If you actually move away from the big cities, it is the NBFCs which serves the needs of the millions of customers that are out there, and they remain the last mile connectivity for most of the tier 2, tier 3 and beyond. And if you really look at the growth of the NBFCs have been around for a long time. NBFCs have seen public sector banks come, they got nationalized, private sector banks came, then you had technology disrupting the whole world of lending, etc. And then NBFCs still have a place in the ecosystem. And you have multitudes of NBFCs now. You have asset vehicle financing, MSMEs, housing, gold, and the likes. So I think NBFCs as an entity is here to stay, and they are the ones that serves the real Bharat beyond the bigger cities. So I think in the coming years, I think NBFCs will have a much bigger and a broader role to play. It may be in many different ways than what they have done over the last few years, as the keynote speaker also spoke about. Maybe by creating partnerships, maybe by working together and trying to enlarge the footprint. But I think the NBFCs have probably the biggest role to play in the future of India's growth.
Certainly, I think as the world is shaping up, what is also happening is NBFCs are coming in different segments, like you said. There are a lot of NBFCs operating specifically in EV finance now. Nothing else but only EV finance. Right? Interesting. Yeah. Dr. Arulmany, can you have your views?
Thanks, Amol. Thanks for having me here. I think as you was also saying, the NBFCs come a long way. I think they are funding the India growth story. Absolutely, no doubt about it. And some of the signs of the growth in the NBFC industry, some of the way forward, how it is going to shape up, can be seen from the intense attention of the regulator to the sector. Actually, the NBFCs pretty much have been looking at the roadless travel, and we have seen, a lot of NBFCs over the last 10 years or so into various segments, whether it is an MSME, whether it is affordable housing, whether it is MFI, whether it is consumer lending or a fintech. There is enormous number of NBFCs. We're realizing the latent potential in India. I think they have come up, and that has brought in the regulators' attention to really kind of put the traffic signal, put the barricades, put the attention. So that itself is going to regulate this industry a lot better, and I think there will be a lot more coordinated activity that will emerge, and some of the if you can use the word, insane things that have been happening probably will also get curtailed, and more the right lending to the segment, because this segment is a vulnerable segment. So NBFC, the growth that we are seeing in the gold loan, growth that we are seeing in the MSME, growth we are seeing in the rural areas, growth we are seeing in the micro enterprises, all of this are going, the money is going to the vulnerable segment, and that is an enormous amount of caution and enormous amount of fair practices that needs to be there. So the attention of the regulator actually is harbinger of growth. Actually, it is actually going to regulate the industry a lot better, and that is actually a good sign for the industry.
Sure, and thank you so much for talking about regulations. Generally, CEOs try to differ from talking about the regulations, but thank you so much for adding that. Yeah, Kalpana, please go ahead.
According to the recent KPMG report, they predict that India's growth story will be touching 7 trillion by 2030. And if you analyze the contribution of NBFC to this growth story, at present it is around 12 to 13%. So I feel there is, with this trickle-down effect, it will definitely boost up MSME and small businesses. And the studies have also pointed out, like MSME, like NBFCs contributing to MSME was around 9% in 2018. It has increased to 19% in 2019. And we have a lot of thrust on digitalization, financial inclusion, macroeconomic policies are favorable, regulatory frameworks are also favorable. Definitely, I think the contribution of NBFC to MSME will reach 30 to 40% in the next 7 years. I think it will be a very positive growth story, and MSMEs and small businesses create jobs. So I think it is important for the sector to grow. Thank you.
Sure. Yes, Mr. Shaji. I think Mr. Shaji is the luckiest and the happiest person, considering his majority of the business is in gold. And I don't need to tell you what is happening in gold.
Okay. So you said that you are lucky, so let me not talk about that part. We come to this point. I think first of all, thank you Amol BFSI for having me over here. Good to see the hall is houseful and people standing behind. That shows what Chennai is for NBFC. Thank you. I think my fellow panelists already really talked about the NBFCs and these 11s and all this stuff. Let me take a step back. What is the India context to this? We Indians are so proud that since independence, we have lifted 1 billion from the poverty. At the time of independence, the literacy rate in the country was 17%. The life expectancy was just around 37. So long journey we have traveled, hence we could lift. This is on one side. On the other side, all the fellow panelists talked about, or most of them talked about, the funding gap and the opportunity still not, completed. The underserved. Look at on the other side. We have made the grand plan to become a developed nation by 2047, our 100th year of independence. In a year, almost 1.8 crore children write 10th exam. So they're all coming into the employment market potentially asking for, who will give them the job? I think that's the larger question. Just imagine the micro SME whom we spoke the most today of not having funding. They just create just one employment per unit. It is estimated that only around 20% of them today get a credit. Why credit is important? It's time that they have to have a trade modernization. The market is changing. There is a lot happening in the e-commerce and the way consumers are buying and their expectation. But they need credit. And on the other side, just imagine that credit can fund even one employment per this micro SME. Look at the job it will create. It's 6 crore number. I'm sure many more to add. Who else will solve this problem? Do you think the IT sector is going to solve the employment problem in India? Do we think that the manufacturing sector is going to solve the employment problem because the automation is so high? In fact, I had a chance to speak to one of the, tire manufacturing CEO. He was actually mentioning the same amount of tires are now produced with a far lower number of people involved. That who is going to create this? And more so, these MSMEs are the deep-rooted in the country. So they are able to potentially can create job in the market that domestic market doesn't without being migrated to the large cities. So how is this going to be bridged? That's where comes the NBFC. If it is so easy opportunity, all could have done long back, right? So it's not. So that's where I think the role of NBFC comes in. And today, it is not role, it's a responsibility. Just to reach that, the 47 grand plan, today's, the GDP we just talked about, 3.5 or heading towards 7 and so on and so forth. We need to become a 30 trillion economy. Then only we will become a developed nation. And today's US is only 27 trillion. Look at the catch-up we need to do. So we need to grow some 10 times. Who will do this? And that's where the larger responsibility, it is not just the opportunity. So today, the role of the NBFC is not just from an opportunity or an asset growth and some business we can do, but a responsibility in the journey of the grand plan to become a developed nation and be a duty bound. I think that's where we start. That's what I want to share.
For sure. You got it. So yes, people see the responsibility and opportunity part really well. Thanks for adding that, Shaji. And currently we are in the best of the times. Macro pictures, high frequency indicators are looking really great. Let me come back to you, Vamsi, and try to more understand specifically. Specific point is, tell us more about the funds. What is the current situation that you are seeing? Perhaps you are the large NBFC, so perhaps fundraising could be easy for you. But how is it for the others, or even for you also? Are the banks releasing or signing the checks very easily, or you have to really try hard, to bargain with them? How do you see the whole fundraising cycle right now?
There are two sets of NBFCs. One is the A and above rated banks. Normally are very clear where they open up for NBFCs which are into A rated and above. These are models, operating models which have secure product range, where there is a strong pedigree and backing of the groups. There has not been any issue in terms of raising the funds. Issue has been with the cost of funds, not so much as far as the liquidity of funds is concerned. The second set of NBFC groups are those which are newly entering into the business side, such as say fintechs, which have yet to have time-tested product ranges, where innovation has been, where the positive side of it being that they have been pretty innovative in the way the products have been designed. But then banks are still yet to see how these products would materialize in terms of the credit cost. Now those are the ones where there has been a little bit of challenge in terms of the raising the funds as well as the cost of funds itself. While large players have not much of an issue, the issue that also NBFCs need to rethink is in terms of the way the fixed rate and floating rate product ranges are there, the operating model itself. Any operating model that serves the MSMEs or that serves customers for productive and revenue generation creation, though there the funding has not been an issue because banks have seen or investors have seen that there is a direct correlation of the lending to the economic contribution directly. So there has not been much of an issue, be it in terms of bank lending, be it in terms of the securitization book, be it in terms of the capital market exposures. There have not been too much of an issue. The issue has been more in terms of the cost. But then those NBFCs which are more into unsecured book, yes, there has been a little bit of stress. But now with the last 2 quarters, there has been a lot of recalibration of the strategies of these NBFCs. With whatever has happened in the month of February, with RBI starting to cut down on the rates, the transmission is yet to happen. However, I think there has been quite a positive signal in the last 2 MPC meetings that has happened, and that should help in terms of coming out of this challenge in the coming days. So that's what we feel.
Sure. So recalibration of strategy, that you said, Gayathri, I would like to build on that itself. So demand is huge there, specifically in the NBFCs, and opportunities are also huge. But how is the current situation? Are NBFCs, according to you, because you deal with them a lot, Are they going, far more aggressive, or they have approached, or they have embraced a cautious approach right now? What is the current state of NBFCs according to you? What do you learn from them now?
Very good question. So, number one, I would say that current state, if I have to look at it, right, there are multiple levels, I would call, in terms of levels of maturity of the NBFC, right? One, from the kind of experience that they have gone through, how they manage the business, what kind of clientele that they are managing, right? And that is, from a maturity perspective, you will have variety of them. And number two, how are people really looking at in terms of utilization of the opportunity that is there in front of them? How much of co-lending is being used, for example, a classic case, right? It's available, but are we using it, right? Kind of, what is the approach one can take for looking at in terms of, I will call it as a mix of the cost of capital, per se, to the point that we were discussing, right? And I also believe that there is a lot of newer entities that are coming in, especially through the fintechs, right, which also constitutes a lot of unsecured portfolio, right? How do we manage them collectively, right, as an overall umbrella of NBFCs to make sure that this segment of the industry, right, really performs to what the country needs, what they really need to fulfill, what the regulator needs, what the customer needs. That is what is the learning every day, in my view. That's what we look up to. Thank you.
That was very interesting one. Lakshminarayanan ji, wanted to ask you specifically about home finance. But I see there is a great rally for the affordable housing. But the question that come to my mind is the affordable houses hai kahan pe? Because I cannot buy any in Mumbai. So, one, how to spot those affordable housing, if you could give us some guidance on that, we'll be very happy. And more importantly, the specific question to you is, what are the trends that you are seeing in housing finance? How's the demand that you are seeing, especially among the first-time buyers in Tier 2 and Tier 3 cities?
Thank you. Housing finance as a business, whether it is affordable or unaffordable, both of them have been growing at a pretty fast pace over the last few years, especially post-COVID. We've seen a resurgence of housing boom in towns, both in metros as well as in Tier 2 and Tier 3 and possibly beyond. There are several factors at work here. There's obviously a fair bit of swift urbanization of these smaller towns that are happening. The amount of investments that are going into infrastructure development in these smaller towns are absolutely unimaginable. Something that you wouldn't have imagined a Tier 3, Tier 4 town having the kind of roads, the connectivity. Of course, the technology is unsaid. I mean, that's taken for granted today. The 5G connectivity, etc., and even the investment in regional airports. So with all of these things, the economic activity has begun to take shape in these smaller towns. So they now become an economic opportunity for even companies or industries to set up shop there. That leads to employment opportunities. So overall, if you see the development of these cities have really taken a faster clipping over the last few years, leading to, as an offshoot, housing boom in some of these markets. And of course, when you compare it to the bigger towns, there is obviously availability of land as well as the relatively cheaper price of land, etc., have contributed to a growth of these cities. And there are government initiatives like the Smart City initiative, the Amrut, the Urban Transformation one, etc. All of these things put together have contributed to this growth. But if from a housing finance perspective, we see this very evidently, the pace of growth in the Tier 2, 3, 4 segments is much faster than the metros. I mean, will they overtake metros? Unlikely in the near future, because your likes of your Mumbai, Pune, Bangalore, the NCR region just from a ticket size perspective and the volume of apartments will still remain the leader, but the pace of growth is in the smaller towns. And we also see, not just for housing, in fact if you look at it even for office real estate or even for data centers and warehouses is something that's catching up in a very big way in some of these towns. For instance, there are data centers that are being set up in smaller towns. When I say smaller towns, likes of Nagpur, Bhopal are not really small towns. So data centers are coming up. The quick commerce teams are setting up warehouses in these locations for delivery. So all of this, eventually leads to job creation and therefore development of housing infrastructure in all of these cities.
So certainly, so if you could learn that affordable housing is more in the smaller cities. If you want to buy a house, shift to the smaller cities, unless you don't receive a gigantic paycheck.
The only other point there is, what is affordable, that definition also keeps changing.
Yes.
I mean, given the rise of the disposable income with a lot of consumers, the pace of the housing prices have not grown as fast as the pace of income. The affordability has really gone up in the last 10 years. So to say that 25 lakhs or 30 lakhs, is that the affordable housing? I'm guessing that, it's not too far that we will have a geography-based affordable limits. You go to Mumbai, it should be let's say a 300 square feet apartment should be affordable, no matter whether it costs 70 lakhs or 1 crore. The same 300 square feet will cost you 25 lakhs in a tier 2 town. So that's probably how it will get redefined.
Yes, agree. I think that was a meaningful one, a very relevant one. Arulji, I mean, the one big change that I have seen with digital innovation now is a lot of NBFCs have innovated their underwritten policies, underwriting and risk parameters so well that they are, giving micro loans as well, right? Even I can see youngsters taking a loan even to go for a wedding. Those are the quick loans, or even for a shopping as well, with BNPL and all those things. My question to you is, when you're talking about financing India's growth story, how the whole underwriting and the risk models are changing? How are NBFCs, innovating that idea in that segment?
Thanks, Amol. I think one of the major challenges for funding the rural micro enterprises or the small towns and rural areas have always been the subjective assessment of credit that we have to do. So ultimately the lack of availability of documents so far have been one of the major challenges. So if you see any of the NBFCs which are into micro enterprises lending or small town lending or the small businesses lending, have not really been ones which have scaled up significantly high. I think today we see on the formal lending, I keep saying this, when we have large housing finance companies and NBFCs which have built more than 1 lakh crore balance sheet, you have not seen even one NBFC which is into the MSME enterprise or into the rural lending having built a 10,000 or a 20,000 or a 30,000 crore balance sheet size, which means I think that is there has been a definite challenge in terms of the assessment that we have to do, because it is pretty much remains personal visits and personal assessment, and it has been individual to them. Having said that, I think over the last couple of years what we have seen is this trend probably could change for the better, and the ability, the impact of the digital footprints that are slowly making inroads even into the rural areas today, their own banking habits which are changing, and their ability to receive money through the banks, which also means that they are habitually who are not banking customers are not today are becoming banking customers. So the NBFC's ability to use account aggregators, the NBFC's ability to use digital footprints that are available, is going to make it a lot more easier to put out a very objective assessment even to the micro enterprises. So I think you can have a mix of both, where you will continue with your physical assessment, but hasten the whole process by your digital data. So it is going to increase their efficiency, it is going to reduce the cost, it is going to reduce the turnaround time, and it is going to make scalability of these enterprises much faster and quicker. So I think you would see well-placed NBFCs quickly scaling up from, if they are around 5,000, 6,000 crores, probably moving up to a 10,000 or a 20,000 or 30,000 will happen faster than originally envisaged. So I think it is very good thing that's happened, and I think it will only get even more easier as we go, as long as the abilities are well equipped, well placed to harness the technology interventions that are happening and use it for their for reducing the cost and offering a better products and offering quicker turnaround time and improving operational efficiency.
Detailed one, in fact, very relevant one. Before I come to Kalpana ma'am, slight anecdote here is a lot of, when we are talking about underwriting loans in a different manner, a lot of TSPs and LSPs tell me that, they are crafting specifically loans for the youngsters, those who are Gen Zs. For example, somebody wants to borrow for going a party. Simple question I had was, okay, who will pay once the party is over? And that's where the NPs are also building up, right? And Kalpana, that's the question that I want to take with you. That we have seen now delinquencies coming up in the microfinance, far more significantly, the number is growing. So what is the current state of the NPAs or the bad loans specifically with the microfinance segment? Are we seeing the bubble busting up very soon, or will the microfinance companies manage and, fade away?
Last year was a tough year for the microfinance industry. I would attribute it to 2 or 3 reasons. One, it was because of over leverage. Although the monsoon was good, but we had poor agricultural productivity. Climate change also was one of the reasons. And to answer your point, we were relying on the group-based lending and the social collateral. The dynamics are changing now. So it has to be we have to use data, we have to use AI, and the underwriting should be that for individual. And the group concept is only for feel-good factor. It can actually improve the customer connect, bring down your transaction cost, but the whole the microfinance landscape is changing. It is becoming more assessment of individuals and giving individuals loans based on their credit worthiness. So there has been a lot of changes in the way we are pricing the customers. We are using data, there's a lot of scoring which is available based on AI, the customer repayment trend. All that is helping us to predict and cherry pick good customers. So I think in another 2-3 quarters, I'm sure microfinance industry will bounce back. And we cater to a very important segment, especially women at the bottom of the pyramid. I also saw a report by Times of India where they are writing 30% of the informal 30% of the rural customers still rely on informal channels of funding. So that serious lending, Niti Aayog and our government takes pride that they have curtailed the ultra poor. The percentage of ultra poor is coming down. That is, I think, microfinance has played a very big role in curtailing that. It was a bad phase. We have learned that group-based lending, because of digitization, so many other changes, it is changing. So we did not realize that. So now it will be data-driven and it will be promising business after 2-3 quarters. But 2 or 3 changes are required. You were speaking about funding also. So for infrastructure, we are tapping the bond market. Why can't they actually have for financial inclusion also, bond market? That will actually lower the cost of funding. That is one recommend I have. If you ask me, that's one of the asks. And even the principal business criteria. If you talk about housing finance, it is only 50-52%, whereas for microfinance, only 25% is the non-qualifying. So if that is increased to 50%, really we can actually build up secure assets and we will not face any such crisis. And we are also diversifying. Seeing what's happening, we also react to the market. Many of the microfinance companies now are focusing on housing, affordable housing, even on MSME segment. At Belstar, we are looking at both MSME as well as gold financing because our parent company has a lot of expertise. So I feel microfinance is necessary. But one more thing I would like to add, like government is also pumping a lot of funds through NRLM, livelihood mission. They should partner with MFIs for skill training because only then the incomes will improve. Poor people will have a lot of money to repay. 10 years before, if you had a seminar, the point would be, which we would have been discussing would have been whether credit is available. Now credit is available, but credit decisioning is what poor people need assistance. We have to actually spend time with them, make them understand what is bullet repayment, about the delinquency, about the family's indebtedness, so that they make the right decision. That is very important. And I want to talk about a project which we did with Vodafone India. It was in 2010. They gave grant support for for helping 50,000 women entrepreneurs to transact through mobile. Why I am insisting is like we need such inclusive, localized solutions because through that their income increase was 30 to 40% because all that can add value to microfinance and may not be a risky sector. It can bounce back and the NBAs will go down.
That was a very, very smart answer and a detailed one. And when you say that, though they over leverage, but they will bounce back, let's hope for the best. And congrats for entering into the gold loan business, which you, I think, entered very, very recently. You received a press release. But let me go to the Shaji. You have another competitor now in the gold loan business sitting beside you. And many people are entering in this business. I think in last 2 months itself, there are a couple of NBFCs now got into this business. But my question to you, Shaji, specifically on the regulations which the RBI has come up with on the gold lenders very, very recently. And they have on one side tried to come up with a transparency for the customers, but increased a lot of layers on the operation sides for the NBFCs. What kind of difference will it bring into implementation and what kind of significance that regulation will have on NBFCs or the gold lenders like you?
Okay, see, first of all, let's look at the data here. Let's give the credit to the regulator RBI, today being known as one of the, manage the financial stability, one of the best in the world. Let's give the credit to RBI for playing that role of both development and the regulation well balanced. Look at even NBFC as a sector level. We always talk about a lot of regulation now. Scale-based regulations also being introduced. But NBFCs have grown 22% in last decade. At a GDP which maybe 6 to 7%, at least 3 times more of the GDP NBFCs have grown. The growth rate of NBFCs are much more than bank itself. So clearly shows that regulator could foresee and get the right regulation and a good balance of both growth and regulation. That is balanced. Coming to the gold loan, I think that's a question precisely to gold loan, right? One is the sector you were, second is the gold loan. First of all, gold loan is a well-regulated sector for a long while. And in my understanding, in the consumer finance, there are only 2 businesses are even LTV regulated. One is home loan and second is gold loan. That actually is well in place. Now, as you said, not many players, this sector is growing. It is projected that in another 4 years' time, maybe potentially is going to double. So, which means it's becoming a category by itself. The preamble of the draft is so well defined its objective. There are 3 objectives which is well defined. One, it says we want to harmonize the regulations. The second talks about we want to bring in clarity. The third, it talks about we want to bring, again clarity of practices between. So these 3 are great things to do. So this clearly will articulate any confusion in the grey area, which will help the players or the lenders and the NBFCs to understand the rule of the game better. As long as there is clarity, we can always do it the right way and thrive. The reason why I said because it is estimated that only 35% of the gold financing in India is still under the regulation between the regulated entities. So 65% is the untapped opportunity. So in a regulated and a controlled environment is far better to kind of help the sector to grow in a sustainable manner. So I think it's good for the sector. So even in the past we have seen these regulations have come to help the sector to grow in a predictable, sustainable manner. Same thing is going to happen here. My view is very clear. The prediction of maybe in 4 years this will double is intact. Now, how this is finally going to come out, we'll have to wait and see. Yeah, I'm sure we also have an association Anglo, or those who represent our conversation dialogue will happen. That is good for the sector overall. Yeah, we have the history of the regulator balancing both regulation and the growth, both the responsibilities have played out very well. Data shows.
Yeah, sure. Let's hope for the best. I think one interesting thing that I have observed with the gold loans is earlier people used to pledge gold specifically for borrowing against, for the wedding or some other incidents, but now they are doing it for various reasons because the cost of investment in gold has gone up very high. I will do one thing, I will take a pause here. I have a couple of questions, but take questions from the audience. Anybody has any question? Can we have a mic there?
Am I audible?
Yes, please go ahead.
Thanks, this was very insightful. We'll be talking more about the lending aspects of NBFC growth strategy. What about savings and investment opportunities, especially for retail customers and the affluent and mass affluent customers or hybrid individuals, especially from the micro savings till your larger investment aspects?
We don't have anybody from specifically saving. That's a good question, but NBFC taking deposits are not huge, and we don't have anyone specifically here. So maybe we have to pass that question. Any other question? Anybody has any other question?
Yeah. Good morning.
Sure.
This is Arulmany. I was working for State Bank of India, and I resigned and started my own business at Coimbatore. I'm a retail loan consultant for SME clients. So just take one word to complete my profile so that my question will be more appealing to you. So I start from road. I call clients 20 lakhs, 30 lakhs clients of ticket size. Today, after 8 years, I put 500 crores of portfolio. So I am a banker. I have worked in credit, I have worked in operations, I have worked in sales, I have worked in recovery. Now I am a consultant. I have worked in nationalized bank, I have worked in private banks. So after all this experience, I had got some understanding about this industry. One thing which I understood as a entrepreneur is like FMCG. For example, if you take FMCG of say HLL, Hindustan Lever, you manufacture a product at say Delhi, it is going to Kanyakumari and it is going. But unfortunately, this banking industry is not developed that infrastructure. I don't know why they have not developed. They have not developed that infrastructure where the lender sitting in Delhi, they can't reach the Kanyakumari guy. And personally, yesterday I was flying from Coimbatore to Chennai. So the first instruction was given me in flight is, you hold your mask yourself before you rescue somebody else. So I personally feel, or what I view is, we need NBFC. First, the NBFC should be, mask should be given. So,
the mask should be given to NBFC?
Yes, first of all. See, A-rated NBFC, I'm absolutely okay. If you just send a mail to some bank, some 500 crores will get credited. But what about the B-grade NBFC or C-grade NBFC? First, we need a mask to put ourselves. Somewhere we need to draw a line. We need to open, come out, and NBFC to be incubated first. Then we can think about the customers. Thank you.
I think there are a lot of thoughts quite incoherent also, but thanks for sharing that. But I think the point maybe if I could quickly take is, on the FMCG part, I think Shaji, you want to take that.
Look the history, how things have evolved in India. I think it was 87 if I remember right, I don't remember now. The world, NBFI, non-banking financial institution, got adopted to the RBI regulation. Okay? So the regulation started since then. That time I think it was around 52,000 NBFCs were existed, and they said, RBI said you have to now register as a formula. Out of the 52, only 10,000 got registered, 12,000. So they got kind of gone away. Then they kept regulating. Today, I think few years back, the regulator said now we will go on a scale based. So there is clear scale based is done. Now the regulator said we will have harmonization of regulations between banks and the NBFC. It is so well regulated. I think you may want to just go back and see which part of the regulation weaks. I think otherwise it's a very large statement. I think it's such a regulated sector. That's the very reason that it's growing and able to, fund or participate in the growth story of India and touch base in millions. Okay? So I think it is, RBI is definitely handholding. There is no doubt in the matter. I think the journey has been pretty decent. We're regulated now. We're going into a risk-based and a scale-based. That's what my take is.
Thanks, Shaji. You want to add something, I think?
RBI has taken care of that, and they really regulate 12,000 plus entities. Of course, NBFC, SFB, private sector, public sector, everything comes under regulation on this thing. That setup itself is a huge step towards, in terms of bringing in the kind of norms that every institution needs to go through. So I think that is the most fundamental thing. So we can't be arguing on that part, right? So that's the base.
Sure. So let me close with, maybe we have just 2 minutes. So my one strongest observation, and anybody, I will keep this question open for anybody who wants to add. Kalpana also slightly mentioned this. When I speak to a lot of NBFCs, a lot of leaders of the NBFCs, off the record, everyone tells me was funding बहुत problem है. Bank अपने हिसाब से fund देगा मेरे को. I don't have a lot of options available. पहला problem. दूसरा, RBI बोलता है कि आप rate decide मत करो, ज़्यादा rate मत दो. तो you will you will borrow at a higher rate, and you will lend also at a higher rate, which is a problem. So is there a fundamental problem with the accessing funds and then distributing at the right level and then maintaining the right balance? What would be the solution for this particular challenge that the NBFCs are facing when we are heading towards financing India's growth story? Anybody who wants to answer, please go ahead.
No, Amol, I think you said it right. I think there has been certain amount of roadblocks or barricades or the speed breakers that the regulator is trying to put. It is not because the funding should not come to NBFCs. In our mind, I think the concern of the regulator comes from the speed at which the NBFCs are growing. And anything when your GDP is about 7-8% and the NBFCs are clocking at 60-70% growth. And is it a well-calibrated growth? Do people understand the underlying risk that is there behind? Because lending is almost at the end of the day giving money for a 3% spread. And it's a systemic risk. So tomorrow, I think the regulator is very responsible for controlling a systemic risk. So as long as you are money to find, as long as you are borrowing from the bank, then the speed at which so most of the NBFCs today, there is a growth potential, there is latent potential, opportunity that is available. So there is a hurry to harness all the potential and then grow it as well. But some amount of caution, because we have seen cycle, because of decades, I think the worry is not about money flowing into NBFCs. More worry is about the speed at which NBFCs seem to be growing. So only there, I think that is emerging, and in my mind, that is rightly so.
me just add a point, but I think he's got put it very nicely. There is a bit of incongruency in what in what we said, but this is also a factor of the regulator, banks, because it's the easiest thing to do is to lend to NBFCs and then let the NBFCs distribute the money rather than banks wanting to go to that consumer. So there's a bit of a problem that they're trying to solve. And it is the speed at which the pace of growth of an NBFC is a concern, because for everything that NBFCs are growing, there are also a bit of challenges on some of the NBFCs, the way they are growing, how they are growing. Obviously, that comes as a result of the Reserve Bank inspections, etc. So they are trying to play a fairly, a very balanced game where they want NBFCs to grow, but they also don't want too much of a systemic risk transfer, because then you have financial system at risk. So that's what's happening right now. I think it's also a cyclical thing. Eventually, this shall cause.
As soon as we started talking about roadblocks, even the mics have started giving roadblocks here. But yeah, thank you so much for listening to us very patiently, and thank you so much for sharing those relevant and realistic thoughts here. Thank you so much for being part of